Hello traders, I trust you guys are doing well. In this webinar, I'll be going through how to identify a trend, mainly an uptrend and a downtrend, and how to know when a trend is exhausted. So in the first example we'll be looking at is an uptrend. So this is a red tool. You just find it when you drop down that menu list, red tool. So we'll start off with an uptrend. So this is our low. And then we have a rally high or rally going upwards, also known as an accumulation phase. Rally going upwards, and then price will always pull back, guys. It doesn't just shoot up forever. So price will pull back. And then we'll look at the fib in future webinars to just give us sort of like a direct place where they'll pull back. Alright, so but for the purpose of this example, we'll say price pulls back here, which gives us a short-term high-low, a short-term high-low, or a swing low, if you will, and then price shoots up and goes upwards. So for us to say that this is an uptrend, here's the first point that's really important. Price must first break this high here for us to say that this is a confirmed uptrend. So price must break this high here to confirm that this is an uptrend. Alright, so this is a low, a high, a low, a high, low, and then price shoots upwards, and from there price will rally downwards and price will shoot upwards there. So we have another high low at this region here. Let me just close that quickly. We'll have a new high low there, and then price will slowly lose momentum, and then we'll have a final push upwards where we have the latest high low. So now how do I know that this downtrend is about to exhaust and is exhausted? The first point in this downtrend is when price doesn't kick as much as it did here. Like you can see here, we're at a big move, and then price starts to slow down. When you see price slowing down, you'll see this mainly, by the kind of candles they give you around that area here. It'd be like spike candles, small candles compared to big, large candles at these levels here. And then another way for us to know that price, or rather that this trend is going to be a downtrend from an uptrend, is when price does the following. So when price breaks this short-term high-low and it comes and retests it as resistance in this example, that's how we know that this trend is exhausted. And most importantly, how they close at that region is really important. How they close for us at that region here is really important. So what we look for here is any bearish signs. So if I have any bearish candlesticks, that close along this region here, that's how we know that this uptrend is exhausted, and we should be looking for short trades at that point. Alright, so that's how we know that an uptrend is exhausted. When price breaks the short-term high-low, but not just only break, but it must give us bearish signs of rejection at that point for price to tell us that we're gonna go down. So let's just have a look at an example. Alright, so here we have use the JPY, and this is the 1 hour chart. So I'm just gonna label out the swing lows. So that's a swing low here, swing low there, and then we have a high, and then price pushed low to give us a short-term high low, and then price shot higher to give us a higher high, and then price went all the way below to give us a high low, and then price has been rolling upwards, a high high, equal highs, equal highs, and then price pulled all the way back down, and then price now is at a higher high. And in terms of our price structure, this is our latest high low, this level here. That is our latest high low. So I'll just cover the bodies. That is our latest high low. So if this if this uptrend were to be exhausted, the first thing that we look out for, guys, remember, is the kind of candles we have towards up towards the price rally. So you can see we had big candles, fairly big candles, big candle, massive candle. Then now the candles are starting to slowly get smaller. The big candle starting to slowly, gradually seeing bearish signs, and then we're seeing small candles build up along that region. So, and then the second point is that if price were to break and to retest this area here as a resistance, we would definitely be looking to take short trades at that level, and then waiting for price to shoot all the way downwards along those levels here. So that's how we know that an uptrend is exhausted. So, and then now I'm gonna do an example on a downtrend. So in a downtrend, guys, it's the same logic as the uptrend. So in a downtrend, it'll start from above. So we'll have price coming from a high, giving us a short-term lower high at that region. So that is a lower high, and then price. So obviously, the same way as the as an uptrend, this is our low. So price should break this low for us to consider this a fully fledged downtrend. And then from here, we'll have price breaking. We'll have price breaking below there, and then price pulling back, and then price to shoot upwards again like that. And then price is starting to slow down, and then we have a quick short loss kick in price. Let me just clone this tool. Alright, so like the example of the uptrend, once you start seeing the candles getting smaller and smaller and seeing reversal candles along that area, it tells that price is slowly exhausting. So how do we know that this trend is going to is now going to be an uptrend? Is when price breaks that region and comes and retests that region as support for price to bounce off and then go higher. And it's important to note that, guys, because sometimes price can do this. Price can just come here from where it is and then bounce off of that, and then it shoots downwards, giving us a double top here. So it's also important to note that when they come towards this area here, like this boundary, is that they break, they give you like a solid break and a retest, and for you to see reversal candles in the opposite direction for you to be able to take the trade going long. Alright, so let's open an example and I'll show you how it looks like. So let's go to the 2 hours. Alright, so here's an example on the 2 hours. This is a high. Alright, it's a high, and then price gave a short-term low, and then had a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low, and then we had a lower high here. So in this region here, so this entire region here was our most recent lower high, and then price went way beyond it, dropped. So here's the focus, guys, this region here. When price pulled back up here, there are two things that we were to expect from here. For price to bounce off here and drop lower if they had any bearish signs, then and then the second option is for price to break above this area here aggressively to start the uptrend. So you can see price, it broke above that region here. Let me just blow this up. You can see price, let me just actually mark out just this region. As you can see, guys, price broke above, so it broke above and it spiked. So these two candles here would look like this. So these two candles here, I can see price broke above and then retested, and then price bounced and went back up. Alright, so let's look for another example. Okay, here's a better example. You can see we had a high, we had a lower low, and then we had a high low, and then so in this downtrend here, and then we had a lower high, lower low, and then we had a high low. So this was our recent lower, this was recent high low in our downtrend. Okay, you can see, guys, price broke above and price almost came there, but it finally came on the second time. So this is a nice example of price breaking the most recent lower high low, breaking the lower high, breaking the lower high and then bouncing off as support, and then price rallied all the way upwards. Alright, so I hope this video does help you guys, and it does contribute to the success of your trading. Thank you.